Yo, it's Monday. I usually don't even trade on Mondays, but I just want to, play around in the markets a little bit. All right, that's all right with y'all, so that way we can try to get to this paper. All right, so it's 6 in the morning. I've been up since like 3. You know what I'm saying? But I'm gonna go ahead and hop on these charts right quick just to kind of walk y'all through some more stuff so we can come here to Apple. I'm on the M15 chart. Again, I want to mark a chart up for y'all as I'm doing it. So I'm gonna grab a couple of these horizontal lines. So I usually grab these again for support and resistance levels. I'm looking at the points that touched in a certain area and dropped, or touched in a certain area and went up or bounced. All right, so I'm just hitting all those areas on the M15. All right, so any of those areas, boom. And these, when you mark it up on the M15, these are key levels, right? They're on a higher time frame, so if they reject it on a higher time frame, the chances of them rejecting again on a lower time frame is very high. So that's why we mark them up on the M15, so that way, as we do the top-down analysis from the M15 to the M5, we're gonna get a better look. So now I'm gonna go to the M5, all right? So on the M5, I see a small rejection, and I usually go to the M5 to catch other rejections, smaller rejections that I couldn't see on the M15. So I'm gonna grab a couple more of these, but I'm gonna change the color again to like white. I'll change the color to white so I can identify that this is the M5. I'm gonna change the color, boom. And I see a zone right in here, a smaller zone. I'm gonna double up on that because I do see another one right there. Double up again because I see a couple more. Hold on, let me move that. I'm gonna move this one up to about right in here. And then I'm gonna do one more on the M5. Now you don't gotta do yours like this if it's like a whole lot of zones for you. If there's too many, you ain't gotta do it like this, but this is just kind of how I be doing mine every day. And this is also what I be using when I'm calling the signals on the OTC pairs. So then I go down to the M1, see if I see any other smaller zones, and then from there I'll hop in. Now you can see, if we look on the screen, you can see the stochastic is extremely high on the M1, so we know we should be getting some type of rejection. Overall trend on the M1 is a uptrend. Overall trend on the M5 is an uptrend. Still got some room to go up. The stochastic hasn't already went all the way up there yet on the M5, and then on the M15, the stochastic is pretty high as well. All right, and it's still an uptrend. So overall uptrend, so we could wait on the pullback or we could trade continuously up. So right now I'm gonna do a $200 or $300 trade for 1 minute on the way up and see if we can catch us some money, you know what I'm talking about? So far so good. Sniper entry. All right, the reason why I did continuous is because I feel like we got at least another minute to go up based off what the M5 is showing. Now I could be wrong, but we'll see. But I feel like based off the M5, it still had a little more room to go up before it turns out around completely. And if you ever wonder why the stochastic on the M1 stays up there for so long, you might have to go look at the M15 or the M5 or the M15 to see why it stays there so long. So I got 19 seconds left, and it's like in and out. So this is gonna be one of them close ones. It's in and out. Let's see what happens. I got like 8 seconds left. 5, 4, 3, 2, 1. Ooh, I got some. Let me see some. 1, 2, 3. Yeah, I got them all. No, I didn't. Hold on, it broke even. Why? I broke even. So you see right here where it says 0, 0, 0. I broke even on that one. All right, so let me see. We're rejecting. So now I'm gonna put another zone right here to see, because this may be where we starting to finally come down. I'm gonna put it right there. Up, we coming down. I'm gonna do the 3 again, but I'm selling off now. The reason why, because it's rejecting. So this was the highest point this next candle did not close above. All right, so since he closed below, we're gonna sell off and see if we can catch us a minute on the way down. It gave us a red bearish candle, so we're looking like we're gonna at least push for at least a minute max. You know what I'm saying? It could push for a couple minutes, but I think we at least get a good minute out of it since the uptrend was so strong. And that's just kind of how I look at it, you know what I mean? Now, for instance, if this candle closes, if this end up reversing and pushing up and closing above, then we'll probably continue up. But right now, and this here is where the 4 entry rule comes in. So I don't know if I'm gonna get this one. Well, I might, hold on. I might, we're gonna look at it. He pushing. 5, 4, 3, 2, 1. So I'm gonna do like 5 or 1, 2, 3, 4, 5, 6. I'm gonna do 6. A 6 entry on my second entry. This is my second entry, y'all. All right, now mind you, it is Monday, so we usually don't trade on Mondays. But boom. So that was a pretty good entry for 1 minute. Now that's the 4 entry rule. The first entry did not go, so I placed another entry for the second one. And if this one didn't go, I place a third, and then the fourth. If the fourth didn't go, I would just be done. Now, I got in my mind, I'm willing to risk at least 2,000 out of the 7 to get to where I need to get. And if I risk that and it don't go, then I'm just gonna be done. Cause I'd rather be at like 5,000. I could trade good off 5,000, but this looks like a great entry. So this is solid. I got 12 seconds left. Oh, and here they go. They trying to play you, boy. Oh man, they gonna make me going for another one, huh? 3, 2, 1, boom. So we got them. We got them. Y'all see they tried to play me at the end though. All right, so we got all 1, 2, 3, 4, 5. So we missed one, but we got the rest. So they put me back at 79. All right, they tried it. All right, so now we looking like we want to push back up. This was like a mini pullback. We'll see. We'll have to see where this candle closes at. If this candle closes or pushes up in here and starts to close somewhere up in here, and we're good. Right now, I'm just gonna add one more of these. I'm gonna add another one of these right below where it rejected. All right, so this is the zone we're playing out of. All right, so right now we're looking like we're going up, pull back, bounce, try to shoot back up. And this is looking like a play. If it closed anywhere below here, then we know we're going down. If it closed somewhere up in here, it's gonna try to push back out. So that's what I'm usually waiting on. All right, it's just a patience game. You be patient, you can make some good money. Don't rush the trades. Let the trades come to you. If you don't see the trade, you don't see the setup you're looking for, do not trade it. All right, but this is basic market structure. You know what I'm saying? The market goes up, pulls back, goes up. All right, and since we're on the uptrend, I'm only, yeah, we looking like we want to push, bro. Let me get in there. I'm gonna do 3. So if you ever notice the zigzag right here and the market's pushing up, it usually wants to connect to this candle. So you should see in a minute, boom, just connected. All right, y'all see that? So when that happens, you can usually do like 5-second trades or 15-second trades and try to catch it beforehand. Now, if this rejection is extremely strong, then it may not continue to push. But if it's not, then it'll push. So we'll see. So far, it looks like this rejection right here on this candle is pretty strong. So sometimes this causes for a longer trade. Like right now, it don't look like we're gonna get this one. So I'm gonna do a 2-minute trade. Wait, hold on, we pushing. I was about to do a second entry, but we got 7, 6, 5, 4, 3, 2, 1. At the last minute they got me. So 1, 2, 3, 4, 5, 6. I'm gonna do a 2-minute trade. That might have been too much. I probably should just do another 1 minute, but we'll see. But we're gonna keep trading in the direction of the trend. All right. And the reason why is because you see it. The rejection on the pullback was good enough, a good enough indication to let me know we still very, very bullish on this candle. I mean, we still going up. As you can see, the push is strong. So a 2-minute trade, perfect. This was perfect. But it's all about patience. Now, like I said, it is Monday, so those are trap days. I usually don't recommend trading on Mondays because they can play you easy. Usually wait till the last few seconds, come down and knock you out the trade. And that's usually why I don't trade it, but I just feel like trading today, honestly. And that's the hardest part, y'all. This is where the discipline comes in, because I'm not being very disciplined right now, and I be teaching y'all that to be disciplined, but it be hard, y'all know it. Yeah, I know it. You just want to get in here and make some money. But if the opportunity presents itself, then you take the trade. And if I miss this trade, I wouldn't be mad technically, because everything lined up. Uptrend. I mean, we got the bounce on the pullback, and we just catching the pullback. We still got like 40 something seconds left, so we should be good. Oh yeah, man, we got that next candle, we good. Let's take a look at it on the 10-second chart. Let's just look at the entry. I like to look at it like this. Look at that. Ooh, that entry look crazy on the 10-second chart. That was super sniper. Yeah, that's sniper, man. Can't make this up, y'all. Everybody running me all my money. I got 15 seconds left. And this is how you trade, man. Patience. You know what I'm saying? You could really stay on the same pair all day if it's 92%, if you just mark it up right, because they hit the same zones. 3, 2, 1. Give me all my bread. That's 8,100. All right? So, that's trading, man. You know what I'm saying? Rule of thumb, trade with the trend. You can counter trend trade if you know what you're doing. If you are a little more professional, you could do that. But I recommend just trading with the trend. Mark the charts up on the M15, mark it up on the M5. Always look at the stochastic, you know what I'm saying? Because even if you mark it up right and that stochastic is high or low, then that could determine a different direction for that small amount of time that you're trying to do. Hopefully that makes sense, but just always look at that and know that you're gonna get another pullback. Let's see, M5 is almost to the 92. So by the time it reach up in here on the stochastic, then you'll get a pretty nice pullback again. But it pulled back a little bit on the M1. But other than that, man, hopefully that helped you. It broke outside my zone, so we knew it was gonna continue up. You could have still been eating that 5-second trades, 10-second trades, 15 seconds, 1 minute. You'd have been good. So hopefully this video helped. You know what I'm saying? I'm about to go in here and eat. You know what I'm saying? Give me something to eat. And Lord willing, man, I'll be able to see you on another video, man. Let's get it. Peace.
Going to different locations, how they got when I need some direction. Me and Vinci go up every session. Cook it up, yeah, you know it's no pressure. Yeah, you know how we do what we all in. We can slow up and you never catch.